This Heiken Ashi trading strategy has a crazy accuracy. It tells you exactly when to buy or sell. As you can see, the average amount of profit you can make per trade with this strategy is very high. What's more, the strategy works on crypto, Forex, and stocks. Hello traders, welcome back to the Switch Stats channel. Today we will be going over a Heiken Ashi trading strategy that has insane accuracy. In this video, I will show you exactly how it works and how you can start trading with this strategy. By the way, if you are looking for a crypto exchange that currently has zero spot trading fees and a $4,300 bonus, check out the link in the description. Now that we have gotten that out of the way, let's start. Heiken Ashi candles are smooth candles that display price action. Heiken Ashi candlesticks are derived from regular Japanese candlesticks. Let's turn on the Heiken Ashi candlesticks so that we can see the difference between regular and Heiken Ashi candles. As you can see, the price action gets smoothed. The Heiken Ashi candles also filter out the noise from the market. The Heiken Ashi candles make it very easy to spot a trend. If you see multiple green Heiken Ashi candles forming after one another, it indicates that we are currently in an uptrend. However, if you see multiple red Heiken Ashi candles forming after one another, it indicates that we are in a downtrend. This might be the simplest way of looking at the Heiken Ashi candles, but if you actually take a few minutes to watch this video and learn how to actually use the Heiken Ashi candlesticks, you will thank yourself. A good example of another very useful way of looking at the Heiken Ashi candles is by determining the trend direction with these candles. If you see that the Heiken Ashi candles have no wicks going in the opposite direction, that means that the trend is very strong. Another way to spot a strong trend is by looking at how many candles have formed in the sequence. If only a few candles have been going in the same direction, this means that the trend is weak. However, if many candles are going in the same direction, this means that the trend is strong. Lastly, you often hear that certain strategies shouldn't be used in a ranging or consolidating market. I even get comments where people ask how they can determine if a market is ranging or consolidating. With the Heiken Ashi candlesticks, you can easily spot this. If there is a small sequence with longer upper and lower wicks, we are in a consolidation period. I hope you now understand why the Heiken Ashi candles are so powerful and how you can use only the Heiken Ashi candles to determine so much information about the chart. But why do the majority of traders still use regular Japanese candlesticks? Well, to answer that, we will need to take the potential cons of the Heiken Ashi candles. Because the Heiken Ashi candles are smooth and averaged, this causes the open and close of the candle not to be accurate to the actual open and close of the candle. The Heiken Ashi candles will also not show the actual price of the asset. This causes many traders not to trade with the Heiken Ashi candles. But there is a solution to this problem. If we combine the regular candlesticks with the Heiken Ashi candlesticks, we can get the best of both worlds. So let's head over to TradingView and add the indicator to the chart. First, change the candles back to the regular Japanese candlesticks. After that, navigate to the Indicator Search tab and search for the smooth Heiken Ashi candlesticks. Select the indicator made by Walneratom. Now close the Indicator Search tab. We will now be changing the indicator settings. Head over to the Indicator Settings tab and navigate to the Style tab and change the color of the bullish green body. Make sure you do the same for the red candle body. We will keep the wick and border colors the same. Now head over to the Input tab and change the smoothing length to 75. Make sure you do the same for the after smoothing. You can of course choose a different or lower length if you would like to enter positions more often. Now click on the OK button and close the Settings tab. You will notice that when you zoom out, the Heiken Ashi candles form a ribbon that can be used to determine trend direction. Let's look at some entry examples. Here is an example for entering into a buy position. As you can see, the Heiken Ashi candles changed from red to green, indicating that bullish momentum has entered into the market. We also notice that there has been a very big spike, pushing the price up. Based on this information, we will enter into a buy position. We will put the stop loss at the recent swing low, and we will put the take profit at the recent swing high. As you can see, the trade was profitable. If you are not sure how to decide where to put the stop loss or take profit, don't worry, we will be showing you exactly how to do that later in the video. Let's now take a look at when to enter into a sell position. As you can see, the Heiken Ashi candles changed from green to red, indicating that bearish momentum has entered the market. We also notice that there has been a very big drop pushing the price down. Based on this information, we will enter into a sell position. We will put the stop loss at the recent swing high and we will put the take profit at the recent swing low. Now I understand that it might be hard to determine where to put the take profit or stop loss exactly, so let's add an extra indicator to the chart to help us with that and make this an actual strategy. Head over to the Indicator Search tab and search for the ATR Bands indicator. Select the indicator made by Alexander T and add it to the chart. Now let's change the indicator settings. Click on the ATR Bands indicator settings and head over to the Style tab. Now change the color of the lower and upper ATR bands to a more opaque color so that it will be easier to see for us. Now head over to the Input tab and change the multiplier on the upper and lower bands to 3. That was all that we needed to change. Now let's look at when to enter into a buy position with this new indicator. Let's first look at when to enter into a buy position. As you can see, the Heiken Ashi candles switched from red to green, indicating bullish momentum entering into the market. We also see that the support point was recently hit. Combining these two signals, we will enter into a buy position. We will put the stop loss at the lower ATR band. We will be basing the take profit on the stop loss. We will be targeting a 2 times risk to reward ratio. As you can see, the trade was profitable again. Now let's take a look at when to enter into a sell position. First, we can see the Heiken Ashi candles switched from green to red, indicating bearish momentum entering the market. We also see that the resistance point was recently hit. Combining these two signals, we will enter into a sell position. We will put the stop loss at the upper ATR band. We will be basing the take profit on the stop loss. We will be targeting a 2 times risk to reward ratio. As you can see, the trade was profitable again. Combining the Heiken Ashi candlesticks with the regular Japanese candlesticks seems to produce great results. Overall, the strategy seems to provide good entry signals. The strategy also provides exit signals that work well. You can, of course, change the settings to your liking to trade on different timeframes. You can even add an extra indicator as confirmation. You can customize this strategy as much as you like to make sure it fits your trading style. I hope you learned something new from the video. If you are looking for a crypto or Forex exchange with extremely low fees, check out the link in the description. Please leave a like on the video and subscribe to the channel if you haven't already. Thank you for watching.